wait for, we have a minute left. All right, can you hear me? Can you hear me?
Yes, I can hear you.
Okay, because you're muted. Okay. Okay. Yeah. All right.
Can you hear me?
7
Can you hear me?
p.m. Yeah, I can hear you.
Oh, okay.
So, folks, it's 7 p.m. and we like to start on time, and because we appreciate that people logging in have other things to do, and we really do appreciate your presence. So we'll start off. So today we'll be talking about success and perfection, and this is way down the alley of physicians generally and healthcare providers. We tend to be perfectionists just by the nature of the profession and what we do. So, and that obviously there's a big difference between success and perfection, and people that pursue perfection are not always successful for different reasons. So that's what we'll talk about. All right, we can have the next slide. So there's the perfection trap that that can quietly kind of erode our ability to build wealth. We always want to wait for the perfect time. We tend to want to review something over and over and over again, but never really make a decision. In real estate, there's a term called when you try to review something over and over again and you just become frozen, which is called analysis paralysis. So we cannot just analyze something several times that we don't really take action. And it's only when you take action that things will happen. So there are different reasons why people kind of delay things. Sometimes it's because they're waiting for the rates to drop, especially when it comes to real estate now. They're waiting for more capital. That may or may not apply to physicians, but definitely waiting for rates to drop applies to them. Well, waiting for prices of homes or properties to fall. As we all know, definitely the real estate market has cycles. So it goes in cycles. There are times when, just like every other investment, just like the stock market does, the stock market definitely has shorter cycles because the stock market can go up and down within a few days, sometimes even within hours. Real estate is not like that. It takes several months, sometimes years, but it does go in cycles as well. So there's usually a downtime for the real estate cycle, and there are times when everything is hot. In the real estate, we're kind of in a down market now because of high interest rates for the last several months. Also waiting on the right deal. Obviously, that's very important. I don't think people should invest in a deal that is not right. It has to be the right fit for you. You have to talk to your financial advisors. You have to talk to your real estate advisors and people that know about real estate more than you do. It's always good to check things out. Talk to your CPAs to see where you want to, whether any deal that you've been talked to about is the right fit for you or not. And as we always say when we have this LinkedIn Live or when we're talking, that we're not financial experts. We're just talking to you about what we have experienced in our lives. We've been in real estate since 2011, for those that may not know that. So we have a lot of years experience with real estate, and we've made mistakes. We've had a lot of wins. We've had a few losses, and it's always good to express what we have experienced and hope that that could help other people that are listening to us. I think we lost the slide there. Okay.
Okay.
The people might be waiting on the right deal. They're waiting to learn more. That's where analysis paralysis comes up, when people just want to learn and they just keep digging and keep learning, and really don't take any action even after they have all the information. And sometimes it's anxiety provoking having to part with money, part with a lot of money, especially when it comes to syndications. We are not talking about small money here. We're not talking about $50 or $500 or $5,000. Most of the time, when people do syndications, we're talking about at least $50,000 or above. So that's anxiety provoking for anybody. And for all even high income earners, it's anxiety provoking to part with that kind of money. But we have to look at it and know that if everything checks out and it looks like a good deal, and we've talked to people that we want to talk to, then we need to take action. All right, the other slide, if you have the next slide, please. The other slide is about success thinkers and perfection, people that are perfectionists. People that are perfectionists tend to want to wait for the perfect condition before starting. They research endlessly, like I said, part of analysis paralysis, and and because of the nature of our job as physicians, too, we tend to research a lot because everything is based on data. You want to be sure that everything is data driven. But when you research and research and you get all the information and you still don't act, then it becomes a problem. Um, they're afraid of making a wrong decision, which also can relate to general healthcare workers. We tend to not want to make a decision, not want to make a wrong decision because people's lives depend on it. Nobody wants to hurt a patient or hurt somebody in the process of treating them. So that could carry over to our wealth creation as well, and we need to be mindful of that. Um, they want guaranteed outcomes before we invest. Obviously, nothing in investment is guaranteed, and that's just the truth. There's no 100% guarantee of anything. It's investment because there's a risk to it. Um, and there would always be a risk to investment, no matter what. What you can do is to mitigate those risks by being sure that you're with the right operator, by checking with your CPA, checking with other people that are experts in the field to be sure that what you want to invest in is a good investment. Your CPA or whoever you talk to, your experts they cannot tell you that there's no risk, because there's always going to be some risk, but we can always mitigate those risks. So the success, the person that's going to be successful has kind of like a different mindset. You have to start with what you have, and then you get better along the way. And my wife will talk later on about our journey and the mistakes we've made in the past and how things have gone for us. So it's not always been a smooth journey, but we've had ups and downs. But we've weathered the storm, and we've gotten back up every time we get knocked down, to use the phrase. Uh, so they learn by doing and adjusting as they go. They know that making no decision is also a decision. I've talked about this several times in the past, that when we do nothing, we're actually making a decision to do nothing, and that has consequences. The fact that we feel that, we really don't want to make a step, or we really don't want to take action, that's actually doing something. That's the fact that you don't make a decision or you don't do something will actually. I saw a saying about something about I'm not afraid to fail, but I'm terrified of regret. I just saw that, I think it was last week or something like that, and I was kind of that resonated because uh, people fear failure, but really, it shouldn't be failure that we should be fearful of. We should be fearful of regret. Regret is when you don't do it and then you look back and you're like, "Oh my God, I should have done that." But failing is part of success. on the way to success, we all will have failures here and there, and we should be able to embrace that. Understands that calculated risk is the path to reward, and we talked about that before. And the cost of waiting. There's a lot of cost to waiting. If somebody invests 100,000, that's the math. If you are getting 16% IRR, which most real estate syndications is between 15 to 20%. So if you invest and you're getting 16%, which is on the lower end of real estate syndication, that's how much you would have compounded in 5 years. So if you don't make any decision, or you don't take any action, then you cannot lose out. So by year 5, if you invest 100,000, you're looking at 210,000. So you're looking at doubling your money or close to it most of the time. All right, next slide. So next slide.
We're on the next slide. The next one? Okay.
No, this is not the next slide. Oh, yeah, this is the next slide. Okay, yeah. No, go to the next slide.
Oh, the next one.
We already talked about this one. Yeah. So I'll let talk about this slide, and we'll go from there.
Okay, talking about our journey since 2011, just as my husband said, we started our real estate journey in 2011, and we started with a duplex, I think, in Florida, in Jacksonville. And when we started, we didn't know anything. We had no real knowledge of real estate owning, especially in the US. But we started anyway, and that's it. The decision just to start and then learn along the way. And then in 2013, we continued to acquire more properties because we were receiving passive income from rents from those properties. And I managed the properties myself because I was a stay-at-home mom. Then I was, so it was easy. And then we kept acquiring more properties. And then in 2016, we started to flip properties. And what I mean by flip properties is we would buy properties that needed a lot of work, and then we will put in, equity by flipping the properties and then renting them out. So that was another thing we started to do. And then and we kind of made some money from that. And then in 2021, we had sold a property we flipped, and we made some money from that property. And then we realized, we've talked about this multiple times, and we realized that we had to pay capital gains tax on the property. By that time, we did not know anything about 1031. Again, we were just buying properties, renting properties, and learning along the way. And again, this was one of those things we learned. It wasn't like we did not start, we started. And so rather than just waiting for the right time, you can just start now. And just like my husband has said, not doing anything is a decision. And that's really true. So after we paid the capital gains tax, it was actually my husband that was like, okay, why? I didn't even think about it, but he started to think about why should we pay that much? There should be another way. And funny enough, we had people that did our taxes, and they never told us about that. They were limited in the information they knew. So, and we'll talk about that some other time. There is a difference between someone that does your taxes and I think analyst, and the other one is a tax strategist. So we just had like people that accountants, but we did not have strategists. So which is the difference? So, and then after we had learned about that, we sold a fourplex in Jacksonville, and by that time we did a 1031 exchange, and then we bought more properties closer home. So you can see how we had started to gain more insight and more knowledge, and then we're starting to do more and to avail of the information and the opportunities around us. And then if we did not start, we would not be able to like learn along the way. So again, 2022 was when we had we had made some investments with I think it was a syndication, and then in 2024 we had lost that money to syndication. It was very painful because it was a lot of money, and again, a learning moments. We did not stop. We did not stop. That was the time when we were supposed to say, okay, not anymore. Again, I am very conservative when it comes to like money and stuff like that. To me, I was just like, okay, no more syndications. Let's just go back to what we're used to doing, just flipping properties, renting properties. Let's just be very conservative. But he went ahead and wanted, he just wanted more. He knew there was more to be achieved. And then he wanted, and while he was on the path of gaining more knowledge and insights, he came across Excite Capital. I think it was on LinkedIn. That was in 2025. So, and then I tagged along, we met the Excite Capital, and we signed up for their mentorship program. And then we started our own company called 3DS Capital. We've talked about that multiple times. We named the company after our three kids. The name starts with D. And while we partnered with Excite Capital, we were able to raise money for the first deal we had with them. And since then, we've been partnering with them to raise capital for deals. So,
Yeah, you can talk about this slide too.
so what success actually requires, it's not what you think. You know, again, underwriting your deals, doing your due diligence. We're not just saying you should rush blindly into a deal. No, you still have to do your due diligence, but waiting for the perfect deal sometimes may not happen. Again, we had talked about analysis paralysis, where you overanalyze and you never do anything, and you find that 5 years down the line, you're still analyzing deals and you never commit. And then again, I talked about underwriting. It's very important. In syndication, we analyze a lot, like hundreds and hundreds and hundreds of deals before we come up with a perfect one. So that is something that we do that has to be done. And we not just underwrite, we underwrite it conservatively. And then we partner with really the right people that are very vast in their real estate journey. Again, we partner with Excite Capital, the like of Excite Capital, Phoenix Capital, and to bring these syndications to the table and to raise capital. So again, if it's something you're willing to do, you've been thinking about, we can help you through that journey. A decision is never going to be a perfect one. It's never, ever, ever going to be a perfect one. Again, going back to when we started. When we started, we had no knowledge of real estate except for the fact that we know that it's a way to make passive income and to make generational wealth, to build generational wealth. And then again, talking about, we had talked in the past about compounded interest. The longer your capital is working, the more it compounds. Every year you wait is a year that you could have been used compounding your interest. And you can imagine when we started in 2011, the properties we had purchased in 2011, you can imagine what the value of those properties would be. Not just the value, the rental income we've gained from that property, the tax deductions we've gained from the properties, and not find that when we started, we didn't even understand the deductions, but we still earned. It wasn't, but we may not have used it to the extent in which or achieved what we needed to achieve at that time. But right now, with the knowledge we've gained, we make sure that with each deal we get our tax exempts. We maximize of all the opportunities that the properties and the laws will avail us. Okay,
All
so
right.
starting today, oh, do you want to add something to that?
No, no, no.
Oh, okay. So starting today, not we would just say it out there. We would advise you, or it's best for you to start now. You've been thinking about it for a long time. You're probably having analysis paralysis. Why not just start now? And then the people now, we've even gotten to a place now that there's so many people, there were so many professionals in the game. They're willing to teach you, they're willing to hold your hands and walk hand in hand with you. And so the rates are kind of high now, but do you know what? This is the time when people are buying. I can remember in 20 when we came to the United States in 2007, and then there was a dip. A lot of people, but we did not understand then. And sometimes when we look back, we regret not buying then. So now is the right time. Now is the right time. And we always talk about BlackRock. It's a company that has a lot of real estate. They've bought a lot of real estate. They never stop. Every year they keep accumulating. There is never a bad time to not buy real estate. It's always a good time because whether you like it or not, the interest is compounding. You're still making your passive income, and you're still availing of the tax. So so I'll just read this. Not next quarter, not when rate drops, not when you feel completely ready. Today, with what you have, where you are, you can start your real estate journey. I would always be here to hold your hand and partner with you and walk you down.
All right. Yeah, I'll talk about this slide. So, as Marissa said, there's just a lot of reason to get into the real estate market now. Even though with the higher interest rates, there's a lot of good deals out there um, to buy. So you can always go to our website and 3dscapital.com. Join our email list and also book a call with either of us to talk about real estate and about any questions that you may have. Um, Generally, I have to stop waiting and start building. We have to accept the fact that there's no perfect deal out there. Obviously, there are good deals out there, um, and you have to look for the good deals. There is no deal that is completely perfect, like 100% perfect, that nothing can go wrong with. But the more you underwrite the deal and the more conservative you underwrite the deal, the less possible for anything to go wrong with it. And also, you can actually have a very, very good deal, but be with the wrong operators, and that could be an issue too,
Mhm.
because there are operators and then there are operators. There are some operators that they are in it for the money. They just, just like in every area of life, and all they see is the dollars, and the problem with that is that they may take more risk just because they are looking at the bottom line and they're not looking out for your interest. So you need to align yourself with operators that will have your interest at heart and will be transparent enough to let you know everything that's going on around, behind the scenes, whether it's positive, and sometimes even if it's negative. It's better to know when there's negativity around the corner than to just be shocked with it when everything kind of comes crashing down. Um, Also define your minimum criteria. Um, Generally, you want property with strong fundamentals, with conservative projections, which is part of the underwriting. Like I said, there's a little bit of projections involved in underwriting, but you want it to be as conservative as possible. Confirm that you qualify. Fortunately, most physicians do qualify. Most high-income earners do qualify, but there's a qualification process to it. So 200K if you are single and filing a loan, 300,000 or more if you are filing jointly or married, and also if your net worth is more than $1 million, excluding your primary residence. So any of those 3 points, just one of them, you need to qualify, and any of those will qualify you as an accredited investor for a 506c syndication, which is what we do. Then you have a conversation. Like I say, you can book a call, you can join our email list, and the last slide is more information about that, about our website, about getting on our email list. And we also, on the website, we also have two free ebooks. One ebook is on commercial real estate and syndications. The other one is on the vocabulary of commercial real estate. Like I've said before multiple times, that even though we've been in real estate since 2011, when I kind of really got into commercial real estate in 2024, 25, there were some of these terms that I had not heard before, or I'd heard before, but I just didn't know the meaning and I didn't really bother. So when I now started getting into it, I was like, yeah, I think I need to know what these things mean. And I started kind of studying them. So I felt that if I was in the real estate space for that long and I didn't know some of these terms, then some of my other colleagues may not know them. So that was why I did we did the other book on the vocabulary. So you can go to our website to download it for free. You can go to our LinkedIn profile and download it as well. All right. If there are any questions, we'll be happy to answer them. There's a comment here from Tom. Thank you, Tom. We really appreciate that.
Thank you.
She's just thanking us for sharing this with us. She believes that we're a pace setter team. Thank you so much. Yes, we
Thank you.
All right. We appreciate you, Tom. If there are any other questions, I'll be happy to answer them. If there's any other thing that you want to talk about, it's almost 30 minutes so that we can.
No, I think we've already wrapped up everything. Our email is there on the screen, and you can always contact us through our emails, phone number, and you can also go to our calendar and make an appointment. That's all. And thank you so much for taking the time out to join us for this podcast. We really do.
Thank you for spending your evening with us. We're really grateful for everything. Thank you, everybody. Bye-bye.
Thank you. Okay, bye.